Hi there, this is Fabi from The Next Big Rush, and today I want to tell you about what is probably my biggest discovery yet when it comes to investing in general. Now, you probably already know that in 2011, that wonderful year, both gold and silver peaked. Silver, I believe, peaked in May of 2011, and gold peaked in September of 2011. After that, they went down for about 4 or 5 years, and now they're going back up again. The one thing that I didn't really realize at the time is that the type of people buying each investment really tells you about where we are in the cycle. Now, if you watched my previous video that talks about the anatomy of an asset bubble, you will realize that the people at the very top buying the most expensive assets at the very end of the cycle, they're really the less educated people about that particular asset. Now, that doesn't mean that they're just less educated in general. Sometimes you have very educated people who don't really know much about that asset buying at the top because they just don't know any better. Now, how could we have predicted that way back when in 2011? Could we have predicted that? Well, I'm starting to believe that there were some signs that now in hindsight we can actually use to prevent us from being bag holders. Now I actually believe that if I had looked at one very simple tool and kept track of the interest on silver and gold buying way back when, I might have been able to jump out before it completely crashed. Let me tell you why. The last people to come into a bull market just before the top are, like I said, the less educated people in that asset, which means that they don't even know how to get the asset. So you can go to Google and see the search term how to invest in ... to see what was the interest in that search term at the time. Was it very, very high? Was it lower than usual? And how does that compare to now? And I'm going to show you right now what it was like in 2011. You're not going to believe how bizarrely easy it would have been to see the writing on the wall. Okay, so when you come over to Google Trends, you can search whatever term that you like and see where you would like to search for. I left it as worldwide because we're searching in English, so that's really what matters the most. 2004 to present, all categories, web search, yep. That's completely fine. Right, so I put in here how to invest in silver, okay? And now I need to explain to you that these numbers here are not absolute numbers, okay? So the 25 here does not mean that 25 people search for this term, but it does mean that, for instance, from January 1st, 2004, up here till March 2004, this was a scale from 0 to 100. Okay, so on the graph, because they started tracking it back here, it would have looked like this spike up here to 100. Okay, so 100 is the maximum, and then it went down. Now, because the 100 was the highest point, then this other point here would have been probably around 75%, okay? Or sorry, not percent, but 75 points, okay? Then it came down, and the reason why it looks now like about 40 points is because with time, what happened was there was a huge spike. Now, this huge spike marks the 100 because after that, no other time period registered anywhere higher than, guess when? April of 2011. Now, here's what the really interesting thing is. April 2011, you see this huge spike. If you go back just even a month before, March 2011, you see how much it grew even in a month, 2 months from the beginning of the year. It's a ridiculous high spike. Now, what's also interesting is that right after April you go to May and there is a huge decline. What does that tell us? The spike is here at 100 and it crashed to 33. When this happens, what it means in my interpretation is that the very last people who don't even know how to invest in silver are coming into the market. They all buy from this time around February to the peak in April. And what happens? We run out of people interested in buying silver. So it crashes from 33 down to 16, and then you have a dead cat bounce to 35, and then it goes down, 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 down. Now, obviously, at the time in 2011, the spike would have been 100 up here, okay? And then you look back and you see that, this spike at 100 is way higher than any other spike that we've had since 2004, which means that the newbies are getting in maybe 4 times as much as they used to back in the days. This is a huge sign that the asset is overbought, or maybe that the asset is even in a proper bubble. Now, the good thing about this is that I hit this today, and how to invest in silver is close to an all-time low. Right now we're at about 4.9. There you go, 5. August 2016, we're at a 5. So in order for us to get back to anywhere near the frenzy of buying of 2011, we're gonna have to see this spike tremendously. Do you want to check out gold? Let's go. How to invest in gold. So these are the people who don't even know how to buy coins coming in at the very last minute. You see it go up and down, up and down. This is because most assets are a little bit seasonal, so that's quite normal. But then you have 2011, July and August. Look at August. Look at August at 100 compared to July at 44. It more than doubled in 1 month. That's a huge spike. And guess what? This was also a month before we ran out of buyers in gold and we started to crash. So both trends, the silver and gold, tell us the same story, that when we have a huge spike and it doesn't continue, chances are it is the end of that particular run. The newbies are already in. There is no one left to buy that investment for now, and then prices crash, okay? Also, in comparison to the big spike of 2011, we are here at a current 16. So 16 out of 100. We still have a long way to go before we see the buying frenzy of 2011 in gold as well. So what can we learn from this? Well, you can use Google Trends for a variety of things, but it's a very good social tool. You can use it to look up, for example, your gold investments. You can type here the name of the company and see the interest over time. Is there a lot of interest? Is there not enough interest? You can bet that I'll be watching this from now on, and as soon as we get somewhere near the 2011 high, I'm gonna be ringing my alarm bells, and I'm probably gonna come out and say, guys, newbies are coming in heavy and maybe it's time to get out. I just really wish I had this tool way back in 2011. And I'll be honest with you, I already knew of this tool. I just didn't know that this could be used as a tool for investment. Now, do realize that how to invest in gold and how to invest in silver is a very specific search term that I found, because otherwise, if you just put something generic such as gold or silver, well, that could be anything. That could be people searching for images of gold stars to print out for their kids. You don't want to be too generic. How to invest in gold and how to invest in silver screams newbie. It screams the last people at the top. That's why we gotta use this exact term. That's it. I hope you use this for your own investments, and I hope you can see the sell signals when they do come along. Thanks. If you like this video, hit like and don't forget to subscribe, because there's a lot more coming your way. Take care.